this is Joe Rabil with Rabil Stock Research. So what we're going to do today, I'm going to start out with a lesson. We're going to talk about the 4MA. Now, I know a lot of you hear the word 4 and you're thinking this is probably all about trading. I'm going to show you how you can use the 4MA on a longer term time frame to really give you some insight on what is taking place, and it can really improve your timing even if you're looking to play longer term. So that's one thing we're going to cover. Then we're going to take a hard look at the S&P. I'm going to go through the market conditions for the S&P. I have not done that for Stockcharts, but I'd like to start doing that, going through, looking at sentiment, looking at volatility, and then we'll go through the trend and momentum in multiple time frames. All right. Once we finish that, we'll go through the symbol requests, and then we'll look at a couple interesting looking stocks. Okay, so I'm looking at the SPY in 4 time frames. I've got the monthly in the bottom left, weekly bottom right, daily in the upper right, and then the hourly in the upper left. And now what I want to show, and of course, if you're using a 4MA, I'm going to give you kind of at least the rules that I live by. When I'm looking to trade intraday, I will use the 4 on a daily chart and watch the bars, and I'll literally have a zoomed in look of the daily chart, and I'm looking for signals that are telling me that this is getting ready. So this is the 4MA right here, simple 4 moving average. All right. And what I'm looking for are where we get the price stretched away from the 4 and it looks like it's reverting back. Remember, the smaller the moving average, the more often we're going to come back and touch it. So you can see where we get a move up like this, strong move to the upside, then the next day is an indecision bar. We open and close at the same level and we're stretched away from the 4. Well, then we should be expecting this to come back down and test that 4 pretty soon. If we get a big gap away like this, stretched away from the 4, then we should be looking for a snapback over the next 24 to 48 hours that touches this line. So we can use that to our advantage. What I would often do is if I see something like this developing and I'd watch the open the following day, and I would look for short-term signals on the 5-minute chart that would tell me that we're getting ready to drop down. In this case, it gapped down, but you can be on the lookout for, like it is right now. Let's say we're looking at this at this point. We got the spider coming down. We're coming down towards the 18, and if we're stretched away from the 4 when we hit the 18, then we can expect some kind of a rebound off of that line. The other thing I would tell you is to be on the lookout for longer term patterns. So this is where I'd go on a weekly chart. Now this can be really helpful for just timing. If you're trading off the daily chart and you're looking for like a longer term swing trade, the weekly, look at how far away this got from the 4 at this point, right? So we can be on the lookout for that. One of the other things I would tell you is that if we have an 18 and we have a 40 moving average, and they're both rising, and you get stretched away on a gap down this far away from the 4MA, we can use that to our advantage. We know that the probability is we're going to snap back. We also have in our toolbox the fact that this is stretched away. This is coming into rising moving averages, right? So we know that there's a pretty good chance we're going to snap back to that moving average. Another opportunity here where we come down and we hit the 18MA, and then the next day we open, we check back and test this big red bar, and then we start moving our way back up to test the 4 because we're too far away. All right. So use this simple moving average. The other thing we can do is just use it as a trend tool. So let's go to the monthly chart, and we can see that when we get to a situation where we're above the 18, we're above the 40, and now we're above a rising 4, we can use pullbacks to the 4 as buying opportunities, right? So it just happened again this month, but the reality is it happened this month. We didn't actually touch it. This month didn't come and test it, but you see that happen on a regular basis when this line is rising above the other moving averages, which are also trending, all right? So use this trend tool as well. We can use it as a reversion to the mean tool. Very powerful to help you with your timing. It also is going to prevent you from making kind of stupid mistakes. If you're stretched away to the upside in a stock, let's just take a look at this on the weekly chart. You see how this is showing a lot of strength, but then it shows this stretched away to the upside. We don't want to be buying on this bar. on this bar here. We want to let it snap back before we take a hard look at it. So use this as a complementary tool, and I think you'll be, I think you'll find a lot of use out of it. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. Okay, so what I'd like to do weekly, I've been doing this on my YouTube channel, but I'm switching and doing this for the Stockchart show. I believe it's really helpful. I think we can stay on top of what's taking place in the S&P by going through these on a weekly basis. So I'm going to show you what I'm looking at. We've got the sentiment. Now, the sentiment that I use is actually Investors Intelligence investor survey. They were clients of mine way back. I've used them for almost 35 years. So I have a good comfort level with them. I don't think they're that much different than some of the ones that are available out there, but it's the one that I use. And what it is the difference between the bulls and the bears. So you can see this in the parentheses is last week's number, which is 24% more bulls than bears. All right. It jumped up this week, a massive jump to 32% in 1 week. That doesn't happen very often. When we see something like that, it raises a red flag a little bit. So I actually had this at neutral, but I moved it back to negative based on the jump this week. This is actually telling us that the market is short-term overbought, and we've got a little bit too much bullishness in the short term. All right. Now, if we go and we look at all the other market conditions, because I'm going to drop this down and we're going to go through the charts and look at the charts, but look at the table. All of these are positive right now. The only one that's questionable is really the weekly momentum, but I've got these all categorized as positive right now. Weekly trend on the monthly, the trend on the monthly, the weekly, and the daily, and then the momentum for the monthly, the weekly, and the daily. The volatility I'll talk about in a second are also both positive right now. So even though this is not overbought, we've got a little mini divergence on the RSI 5. You can see that we made a little lower high as price made a higher high. So I'm categorizing that as negative. But what these bottom 2 tell us, they're not necessarily trend indicators. They're telling us that it's a little frothy right now. And that can happen at any time. We could get a pullback. The fact that all of these are positive suggests to me that this is more of a healthy pullback that we need to take place. I'll tell you what I'd really be looking for in a second. So I'm going to drop that down. Now, let's take a look at some of the things that are taking place. When we look at the daily chart, the volatility, this is the average true range of the SPY using a 20-period moving average. And you have a 18 MA overlaid on top of it, this purple line. All right. Now, that turned down really in May, and it's been negative it's been declining for this whole period. Now, when it's declining, that's actually a positive. Saying lower volatility is a sign that we have the potential for a trend to the upside. Now, when we see increased volatility, that's when if we see this line starting to rise with a moving average, we know there's more risk associated with that type of market environment. So you can see what's taking place, though. We've had a number of times where we pulled back along the way. We're doing another one here, but this time it looks like it's trying to break the 18 MA. If we were to get this to rally to the upside, all right, and get the moving average rising, then we would have this time frame negative with volatility and this time frame positive, because you can see what's taking place on the weekly. We've been negative and now we're rolling over. This line is turning down, the moving average line, which is very important to me when we're looking at the volatility. And so we've got a little short-term overbought. If we can work that off and work that down towards the 50 line, maybe on a closing basis, and then have this continue to decline, I think we'd be in a pretty good position, because I think we'd be pulling back towards the 600 mark and where support is. So that's kind of what I'm looking for, is a low volatility decline. If we get a low volatility decline here, where this actually might be rising on a short-term basis, but on an intermediate term weekly basis, we're seeing improvement, I think this could get really attractive. So be on the lookout for this to decline and this to continue to drop. We want this moving average to drop, and we want the average true range to drop, and see if we can't get this down into neutral category. It's pretty close. It wouldn't take too much, but if we can drop down over the next week and a half, I think that would be a really good sign. Let's switch over and take a look at the different time frames. So on a monthly basis, we are in an uptrend, but look at what's taken place. We had a big run to the upside, then we pulled back, and we had this big tail form at the 18-month. And now we've climbed 1 month, 2 month, and you got to include this a climb too. I mean, this is a big move off the low, and then you have another move, and then another move, and then another move, and you can see they're shrinking. The size of the bars are getting smaller. We don't really have to be a genius with momentum to say that the momentum is slowing. And in fact, this is going to show up a little quicker using the bars than it is in the momentum. When I look at MACD and ADX, I don't really see anything that's startling bad, right? It's just a sign that it looks a little tired. It looks like it ought to try and pull back here. If we go to the weekly chart, we can see that we're making a little stutter step, right? We had a move back, and then we tried to move up, and now we're moving back again. It's a little bit different than what we were seeing in June and July. I think this is sort of showing some weakness, because we made a marginal new high with no follow through, and now we're re-entering that, all right? So we're trying to break the 4 here, which is kind of interesting. If you notice, the 4 has been acting as support pretty much all the way through. Even this drop right after, it got right back above. So if we were to break this and have that line roll over, we haven't really had that in a significant way. We want to break this, and then the following week have it break the low of this bar. I think that would be pretty significant from a short-term standpoint. The reason why I have this categorized as positive is green DI continues to make higher highs and higher lows. Now, it never got above 25, but I would say that it is in command right now if one is in command. The other one that I'll say is MACD crossed back in May, and it's been confirming the move all the way up. All right, so that's on the weekly chart. On a daily, we've had decent momentum characteristics, and what I've been telling my subscribers is just to completely ignore this, right? The MACD, when you get this type of signal where, divergence just breaks, it looks like it's going to diverge, like it runs up and can't confirm here, and then it goes, and then it makes a new high. Once that happens, you just kind of ignore it. It's one of those irregular uptrends for MACD, and I just don't think it's all that helpful. But notice what's taken place. We gapped down below the 18 here, and then took off to the upside. Never took out the low of that bar. But now we're re-breaking this moving average, and if you notice, the moving average looks like it's really losing a lot of slope, and MACD is recrossing here without making a new high, so we have divergence in place, and I really should have opted to change the momentum, at least on the daily, to neutral at this point based on what's taking place. But I'm not looking at the MACD all that closely, so that's why I left it at the positive sign. It's almost like you're just going to keep ignoring this until we get a true break of the 18MA. If we break the 18MA on the daily chart, I think there's a very high probability we're going to work our way back down to the weekly 18, and I think that's going to set up a pretty good opportunity if there's low volatility associated with it. Now, the one thing you could look for is a little bounce here. If we can get a little bounce off this rally, look at the momentum characteristics, some strength showing up. If we were to get an RSI 5 bounce to get that back to neutral that fails, you could almost look at that as a shorting opportunity or a hedging opportunity for any longs that you have. Might be worth taking a hard look at. As always, my comments are for educational purposes only. Please do your own research on these things, all right? What we're going to do, I'm going to switch over to the IWM. I want to stay on top of this because if we see improvement in this, it's going to really improve the overall conditions the market has. So it should actually put it as a market condition for the S&P is to see this line improving. Believe it or not, if this is outperforming the S&P, the IWM, All right. If we see enough strength where the moving average is rising underneath it, then I think we're in a position where the average stock is going to start to show signs of life. We're going to get follow through in trades we put on. You don't put on a trade, have it go up a little bit and then get stopped out. Maybe make a little bit of money first and then have it stop you out. That's the type of environment we're in for a lot of stocks. I'm not saying there aren't some pretty attractive patterns that have made big moves, because there have been, but it's not been the environment where, the average stock has played all that well. So we're going to look at this IWM and stay on top of it. We're looking for this break to the upside where the moving average cups around. One of the good news is that we did, one of the things you can do here is on Stockcharts is you can zoom in on one of them. Notice what happened here. We got an RSI buy signal where the RSI 20 stayed above 50 and the RSI 5 dropped below, and we made a pivot bottom. We actually made a pivot low. You can't really see it with the zigzag over, but the price actually did provide that, and so that is a pretty good sign. The fact that this is trying to turn to the upside with some improvement in on an RSI basis. All right, so we've got that. The negative is we don't have RS yet, and we haven't seen any momentum yet. The momentum on all time frames is low, and this is the daily chart, and this made a pretty decent move. And notice how DI couldn't even get the ADX to cross above 25. That means that we're in a choppy environment, not the type of environment where you put on big strong trades looking for big strong moves. All right, so be careful with that. All right, let's start going through we only had a few requests this week. I'm going to go through those, and then I'm going to give you a couple of highlights that I think we're going to learn something from. All right, so let's take a look at ALK. Little bit of a low ADX pattern on the daily chart, but when I look at this, I see this big red bar. This is what jumps off the page to me, is this monster red bar with resistance probably in the low 60s. Now, it might want to get there. We might actually get there. We might do that and make that rally, but I'm not convinced that it's really going to break through that at this point. So we might get a little bit of a trade. I would feel like I have to really play it tightly if I were going to do it. I don't think I'm all that interested in this right now. Now, if we do this, if this goes like this and forms another wave, right? We make a little zig down and then we zig back up. Now I'm going to have a lot more interest in it. All right. Let's go ahead and go to the next stock. So we've got AMSC, American Semiconductor, really, really strong, and it's already made a pretty big move. And look at this big green bar shows up on a gap on earnings after a big run. Remember this. This is really important. We make this big run, and then the biggest bar in the move is way up here after a big run, right? If it shows up here, it's an igniting bar. It's the start of a move. When it happens here, it's an ending bar. It's like an exhaustion bar. So I think that's what's happened here. I think we formed some kind of exhaustion. We're going to go through consolidation pattern and correct a little bit in the near term. I do think there's a decent amount of support underneath, maybe in the high 30s. Could be as high as 40, but we need to let this cool off a little bit. All right, CNO. So this one's really intriguing. All right, now if you look at what's taking place on the monthly chart, we make a move to the upside and we work our way back down to a rising 18-month. But the MACD has crossed over the signal line, all right? And then if you notice here, we've got a lot of strength in the momentum on the ADX. So what do we do in this situation where we have strength in the ADX, but the MACD has crossed down through its signal line? I know a lot of people would just say, there's no way I'm doing this with the MACD crossing down. What I would tell you is I would keep it on my watch list because of the ADX. The ADX is more important than the MACD, believe it or not, in this situation. What it is telling me is that we've pulled back here, but it's probably going to take a little bit of extra time. So what that means is just because this is coming back up through these moving averages or breaking out the first time, do not take that trade. We're going to look for this to come up the 40 or something like that. We want the first test of the 40. This is really important. The first test of the 40 after this takes place, if we have crossover. If there's no crossover and it just pinches in and this settles like this and this MACD doesn't go through the signal line at all and we have a low ADX signal, you can buy the breakout pattern. You can go ahead and buy it the moment it closes above the 40 moving average. So you can do that. All right, look at IVZ. Look at the dynamics of this move to the upside. You see the strength of this move? This is one thing you really want to learn. If a dynamic move move to the upside, confirmed by ADX and confirmed by volume, and the MACD is also confirming. We want to look for the first pullback in this situation to be a buyer. All right, so actually I would be watching for the RSI 5 to drop down below 5. This is a big breakout pattern. Look for a pullback in this. ROK is the same thing. Look at this huge base. We undercut the base to the downside, but the MACD didn't break down at all. And then we turn to the upside. We get green DI going on the monthly, and then we get a tail forming on the monthly, and we're forming a turnaround. I think we need to get through 350. We made it through earnings, but I'd like to see this get through 350 to kind of confirm the signal. One thing I would watch is breaking up through 350 in Tesla. It's having a real tough time with that level. I think if it does and there's volume behind it, it'll be pretty important. Right now, it just failed at it again. I would not touch this right now. Wouldn't be looking to be a buyer unless it gets through 350 to the upside. And then Disney, I think, is really interesting because it's inside the base, but we're getting an RSI buy signal inside the base. These were not. You see how the RSI 20 dropped well below the 50 mark? Both times. This one it's holding, and we're holding pretty good support. I think this is really interesting, but we need this to turn up and make a pivot low to give a signal. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, I would go to my YouTube channel. Have a great week, and we'll see you next time.